Welcome to Stress-Free Retirement, brought to you by the Oklahoma Financial Group. And I'm Reed Mullins, your host. We're here with Michael White and Doug Rodwell. Hello, gentlemen. Good to have you back for another week here.
Morning, Reed.
Good to be back.
And, as we meet on Saturday morning, we've gone through another week of who knows what. And if you're like me, you're thinking, I got to get on this financial planning thing at some point because I'm ever nearing my retirement, whether I want to face it or not. But that's why we're here.
Absolutely. And, last week I think we had a pretty good show.
Yeah.
We covered the top 10 biggest misconceptions about annuities, numbers 1 through 5.
Yeah.
And today we're going to go through the rest of them.
Even if we're jumping in the middle of it, it's okay because you're posting our shows now on your website.
Yeah, you can always go listen to past shows at okfingroup.com. Just click on the radio show tab, and there's past shows right there on the website you can listen to.
Remind people where we got this. We're drawing from a great book that you have.
There's no point in reinventing the wheel. And there's an advisor that we really like. He's a good guy. His name's Tony Walker, and he's written a book. It's called The 10 Biggest Misconceptions About Annuities. And a lot of the material we're going over today in last show is actually out of his book.
Okay.
It's easy to read. You can find his book, and of course, we don't get anything out of plugging it. Maybe we ought to. Maybe we ought to call Tony. But anyway, you can go to his website, which is TonyWalkerFinancial.com, and I believe you can order his books, things like that from there. But it's really simple to easy read. It's just a couple pages.
Now, I knew there was a thing called an annuity. I did not know there were different types.
Yeah, it's the first thing we're going to start off with today. We're going to talk about the different types of annuities, and the misconception is the different types of annuities are confusing, and I'd have to agree. You need to know what kind of annuity we're talking about. It's hard to throw annuities into one bucket and say this is an annuity because there are several different types. And first, in fact, Doug, why don't you tell us a little bit about fixed annuities? We got fixed annuities, variable annuities, immediate annuities, and Doug's going to touch a little bit about the fixed annuities.
Yeah, and I think the first thing I like to point out is if you're ever approached about putting your money in an annuity, ask a lot of questions. Okay. Make sure you have a complete understanding of it before you put your money in it. Now, as we mentioned last week, an annuity is a contract between you and an insurance company.
Okay.
So when you decide to put money into a fixed annuity, and that's what I'm going to talk about this first segment, a fixed annuity, you are given a guaranteed interest rate. So you know exactly what you're going to get. Now, you can get them for a period of years. In other words, a fixed rate for 5 years, a fixed rate for 3 years, or a fixed rate for just 1 year, and then it renews to whatever the declared rate is at that time.
Okay.
But you get a guaranteed rate. You put $100,000 in, and it's a 4% annuity. You're going to get $4,000 interest. Then that's your new starting point for your next interest. Okay. So you can't lose anything, and it's guaranteed. Fixed index annuities have become popular lately because, for instance, Reed, if I could show you an account where you can put your money is not in the market, but the return that you receive is linked to the market performance. So if the market's up, you go up, and your gain is locked in. You can never lose.
Okay.
Market goes down, you don't go down. Would you be interested in that?
Well, absolutely.
Yeah, it almost sounds like, people tell us, well, that sounds too good to be true. Well, it is true. You can put your money in a fixed indexed annuity where you can participate in the market gains when it goes up, but when it goes down, you do not participate in any of the losses. And there's a lot of details that I'm not going over right now because we just don't have time, but that is the basics of what a index annuity does.
Well, it sounds like a good deal.
Well, in those index annuities, again, the key is safety. It's a safe place to put your money.
Yeah.
But we're not locking into these low interest rate environment that we're in right now.
Okay.
So are you going to earn as much money as you might in a different kind of a variable annuity, which I'm about to talk about, or a brokerage account, something like that? No, but when that brokerage account starts heading down because of the downturn in the market, your fixed indexed annuity will not. You are absolutely protected. So the second type of annuity we're going to be talking about is called a variable annuity. And a variable annuity is it really means that your money is invested in mutual funds or some other type of security. Now, you can earn all the money in the world in these variable annuities, but you can also lose all the money in the world in these. So not all annuities are created equal. Some are designed for safety. That's those fixed annuities we've been talking about and focusing on. And some are not. Some are really aggressive, go after the returns in the market, and that'd be those variable annuities.
Okay. And I might want to point out one other thing on the annuities. First of all, we are licensed to offer variable annuities, fixed index annuities, any kind of annuity. We're licensed to do that. So I'm not just going to say something negative about variable annuities because I can't sell them. Well, that's not the case.
Okay.
But variable annuities are very expensive. You need to know what the internal costs are, what the fees are going in, and what the ongoing fees are in variable annuities. Fixed index annuities and fixed annuities do not have fees in them. Okay. So two totally different. One's has a lot of risk to it. The other two do not.
That's the trade-off then.
Yes.
Right? Okay.
Yeah. In the last one, we don't want to spend a whole lot of time on, but it's called immediate annuities. Basically, you take a lump sum of money, you put it into the annuity. It's going to guarantee you a income stream for a set period of time for 10 years. But the income stream starts immediately, hence the name immediate annuity. I've used these kind of in the past to help fund other expenses. We know we got something that's going to cost us $2,000 a year. So what lump sum of money can we put into it to give us a payout of $2,000 a year for the next so many years to cover that? That way we don't have to think about it or come out of pocket for those.
Would we talk of college expenses or something like that, maybe?
You could certainly do something like that. Usually in the later years, I've talked to people the concept of doing it with long-term care premiums before.
Okay.
And the beauty of it, too, is if we're talking $2,000 a year for 10 years, 20 grand, we don't have to put 20 grand into an immediate annuity to get that 20 grand out. That's the interest that's built into it.
Okay.
So let's go ahead and move on real quick to the last segment before we move on to our break. But let's talk about annuities are not good for older folks. Doug, you want to? No, yeah, that was me. I think I'm going to.
Well, that's okay. I can
go for it. You're a little bit older than I am.
Oh, barely. I'm the guy with the gray hairs. Quite the contrary. In fact, the older a person is, actually, the more suitable a fixed annuity or fixed index annuity is for them. Because typically, as a person gets older, they've gone through their accumulation phase in their life, and now they want some safety. They want to make sure that they don't lose what they've taken their whole life to earn. So most people, let's face it, the older we get, we want to protect our money, and we're just not interested in losing anymore.
Okay. Very good. We've got a great start going here. We're going to be back with a whole lot more information, and we're going to give you our contact info, too, when we return after this quick break on Stress-Free Retirement on the Eagle. Welcome back to Stress-Free Retirement, brought to you by Oklahoma Financial Group, okfingroup.com, okfingroup.com, 405-310-0098. Go ahead and call in and leave your name and number. I love this annuities concept. I was introduced to it last week. Really hadn't had a whole lot of experience about it. There's got to be some pitfalls to some of this. I mean, aren't there trade-offs and everything?
Absolutely. When a person talks about annuities, they have to be safety-minded.
Okay.
They are savers. They're not. I would not call them an investment unless you're in the variable annuity. But then you got to be willing to take risk and lose some money. But there is a misconception that annuities are not safe. Now, they are not backed by the FDIC. So these products don't have the government backing. They are backed by the faith and credit of the insurance company that issues it.
Okay.
There are, however, excuse me, you'd want to check with your state insurance department, because most states, in fact, I believe all states, I know Oklahoma does for sure, have a state guarantee association fund that it's a pool of all the companies that do business in the state, and they back the products also.
Okay.
So you got the state, and then you have the insurance company first and the state.
So there's
behind
something there.
There is.
Yeah.
We can't tell a person that they should do an annuity because it's backed by the state. We're not allowed to say that, so you need to check that out yourself. I'll tell you, I've worked with insurance companies for over 30 years, and I have never, ever had a problem with an annuity contract. The companies always do what they say they were going to do in that contract. In fact, during the Great Depression, there's no record in history of an insurance company failing to pay the claim. And that was the worst economic time in our country's history.
Okay.
So, when you deal with an annuity, you are dealing with safety for the person who is safety-minded and wants to have guarantees.
I'd almost like to joke about it, but it's they may not be FDIC insured. They're only protected by the same insurance companies that protect your car and your home and everything else that you buy insurance to protect. And so it's just exactly that. We're protecting those assets for use during retirement. Now, our next one is kind of a sensitive subject. You know, you hear so many different things about that, but the misconception is that annuities pay huge commissions to agents. Now, granted, none of us in the professional world do anything for free.
Yeah.
We're not in the business of doing stuff for free. We're in the business of helping people, but we've got bills to pay, kids to raise, things like that too. But it's definitely a misconception. The first thing I want to point out is that commissions that are paid to agents are not coming out of our clients' money. The insurance companies pay commissions to agents for bringing the money to the insurance company. So just an example, you bring $100,000, you want to put it into a fixed annuity. $100,000 is going into the fixed annuity. Day one, your contract value will be no less than $100,000. Your money's not coming out to pay us. That's coming directly from the insurance company, and it's important to understand, because if you're going out and buying mutual funds, you're going to pay fees, possibly commissions. There's such thing as no load mutual funds and things like that. But there are fees and there are commissions, and those are coming out of your value that's in your account.
Okay.
And one of the downsides of that too is whether you're making money or you're losing money, you're paying those fees.
And let me mention also that anything you put your money in, there are fees attached in some form or fashion. If you go down to the bank and put your money in a CD at 2%, well, does the bank just lock up that money in a vault? No, they invest it. Yeah. And so they're giving you 2, but they may be making 6.
Yeah.
So even though you didn't pay a commission, you didn't get paid the full amount of what that money's invested.
Okay.
So, and you know, we all like Michael said, we all do get paid, but nothing comes out of our clients' money.
Okay. Very good.
And one of the reasons that I like fixed annuities is because in most cases the insurance company is paying me a one-time fee. So I'm bringing you as a client. I'm getting this one-time fee. That means all of your money's working for you from day one, right?
Okay.
And after that initial commission, I'm not paying anything else, but I'm still expected to take care of your money. And I'm going to do that because I've got a book of business I need to be taking care of and maintaining those relationships. But that's good for you because now we're out of the fee game. We're not doing this money driven. We're doing this because we got to focus on your account and helping you make money, make sure you're comfortable with the decision that you made. So one of the other things that's tough about this huge commission, each company pays a little bit different commissions. These aren't standardized. But you see claims out there that agents are getting paid 15, 20% commissions, and that's giving them...
Can you tell we're a little sensitive about this?
I tell you what, I'd be making a heck of a lot more money if I was getting paid 15, 20% commission. Yeah. That's just not the case.
Okay.
Now, we are getting paid a decent income to do these things, but it's because we're professionals, we know what we're talking about, and we're making good recommendations. Doug, tell us a little bit about this last one. It seems a bit absurd to me, but it is a misconception that's out there.
Yeah, a lot of people think that annuities are good replacements for life insurance.
Okay.
Now, annuities do have a death benefit. You can name a beneficiary. So when the annuitant dies, whatever is in the account goes to the beneficiary. Okay. Now, if that person has been taking money out, whatever the balance of the account is goes to the beneficiary. Now, life insurance, of course, we know it's set up just to pay cash upon death. And that money goes income tax free. The full amount of the life insurance policy goes income tax free to the beneficiary. Annuities aren't. There is some taxation on to the beneficiary. So to replace life insurance, I think would be an injustice to a person to recommend doing that. I think a better balanced approach is to have both. Have the annuity and have some life insurance too in the event of death, because if you start taking income and you spend down that annuity, well, eventually there's not going to be anything in there.
Okay. All right. Very good. Well, I know that people are going to have more questions than I could ever ask because everybody's an individual and in their own circumstance. So you guys have email addresses as well that I think are on the website.
Absolutely.
If we wanted to get in touch with you, we could do that.
And it just simply, it's Michael at okfingroup.com and Doug at okfingroup.com. But all of our contact information is right there on our website at okfingroup.com.
And once again, the phone line is active, but the answering machine is on 405-310-3776. 0098. So go ahead and call, leave your name and number. We'd like to get back to you at the first part of the week. And of course, the great website is okfingroup.com. okfingroup.com. When we return after this break, we're going to conclude our little talk on annuities here and tell you a little bit about what's coming up in the future when we return on Stress-Free Retirement on the Eagle. Welcome back to Stress-Free Retirement, brought to you by the Oklahoma Financial Group, okfingroup.com online, and also the phone number 405-310-0098, here with Doug Rodwell and Michael White. And Michael, part of the reason I really wanted to work with you guys on this show was just my own personal education, if you don't mind that.
No.
So I'm kind of getting paid that way.
Yeah.
And I didn't know much about annuities, but I do now. And some of the things that I had been told were just not right, which I'm glad this man wrote the book, and I'm glad you're here to talk to us about it
Absolutely.
today.
You know, we've really enjoyed this. For those of you that stuck through the last 2 weeks of us talking about annuities, I hope hoping to open your eyes a little bit.
God bless you. There's a special place in heaven for you.
So many people are misinformed. There's a lot of misconceptions for all different kinds of reasons, and a lot of it has to do with, I mean, there are brokers that have their bias for certain reasons. There are insurance agents that have their bias against security products. The truth is, everything exists for a reason, and if you're using that product or that investment vehicle for the right scenario, it's appropriate. And so it's about being appropriate and picking what's the right product or the right investment for you. And these annuities have a very good place in that safe-minded, fixed setting where they may want some lifetime income, but they for certain don't want to lose their money. That's the place for these things.
That's what I'm looking for. And really, because I don't have a whole lot in the first place, but what I did was work a long time to get it.
Yeah.
And so I want to hang on to what I have.
And, you know, with the annuities, you're not going to get that skyrocket jump interest rate. So you're not going to get filthy rich in a fixed annuity. But you're going to get guarantees, you're going to get guaranteed returns, and you'll be able to sleep at night knowing that you're not going to go to the poorhouse.
One of the things that we ask people, that if I added $100 a month to your retirement income, would that change your retirement scenario very much? It may change a little bit, but not a ton. But if I told you we're going to take $100 a month away from your retirement income, that could change things.
Yeah.
And so there comes a point where the safety of money is a little bit more important than the returns you're getting on your money.
Will Rogers.
Will Rogers. Yeah.
What did he say? I'm more interested in the return of my money than the return on my money.
Yeah. Yeah. Well, some of our advice is that, just to kind of wrap this up, is to work with an agent or advisor who specializes in fixed annuities, preferably someone who's worked with these products for a number of years. Ask a lot of questions, get a lot of answers, feel comfortable with what you're doing. Don't necessarily just buy a product, buy an advisor who's going to give you some good advice.
There are brokers out there who are biased toward one type of annuity or over the other, and that's okay, but just ask them why. Ask them why. Again, and I know I've said this a million times if I've said it once on the show, but these are for the safe-minded people, the fixed annuity. Variable annuities are in the market, fixed annuities are not.
Next week, we're going to jump over to 401k rollover and pension decisions.
That's where I am.
Yeah. You used to work somewhere and you had some money. You're not working there anymore. What do I do with that old 401k?
Right.
Or I'm retiring. What am I going to do with that 401k? Or I'm retiring. I got a pension. What options do I pick? You got several. So we're going to touch on that next week.
I noticed this past week you guys did a couple of your famous Medicare workshops.
Yeah.
Do we have some more of those in the future?
Yeah, we got several coming next week. And, of course, you can find those dates, locations, times on our website at okfingroup.com.
I'd like to point out that these are educational-only workshops. We hold them at public libraries, and these are not any kind of sales events. We're just there to educate folks on Medicare, their Medicare supplements, and the options that they have.
All right. Very good. I'll bring the donut. No pun intended.
We'll have a coffee.
All right. Thanks so much for all your good advice and good information this week. And we thank you for listening. We're going to be back again next week with another installment of Stress-Free Retirement.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. On behalf of Doug Rodwell, advisory services are offered through Investment Advisors, a division of Pro Equities Inc., a registered investment advisor. Securities offered through Pro Equities Inc., a registered broker-dealer and member FINRA and SIPC. On behalf of Michael White, investment advisory services are offered through Red Hawk Wealth Advisors, Inc., an SEC-registered investment advisor. Both are Futurities First Insurance Group agents. Futurity First is independent of Pro Equities, Inc. and or Red Hawk Wealth Advisors.